Do you think life is simpler as time evolves? For some, it can be more complicated when facing issues about health, estate plans, probate, long-term care, and more. That's why Attorney-CPA Joe Cordell hosts ElderTalk with TuckerAllen, providing intelligent answers for those thinking about their future. Here's Attorney-CPA Joe Cordell.
Welcome to another episode of ElderTalk. With us today, financial advisor Louis Wray. A popular guest, has been with us, Jill, how many times?
Four times, I believe.
4 times. Yeah. So we always like to circle back with our regulars and see what comments they have to changes that have taken place since they were last here. Finances are always, we know, among the top items on your list of concerns, that and health. So our guests are disproportionately relating to health or finances.
Yeah.
Louis, I guess we could start by talking about the pandemic's effect on your clients' plans. I mean, they have this wonderful retirement plan you had mapped out for them beautifully. They were probably directly on course. Maybe they were in their 60th year or so, and all of a sudden pandemic comes. Has this accelerated their retirement plan or slowed it down? Who would have thought that a pandemic could accelerate someone's financial independence? But I guess some would say it's been that effect.
Yeah, I mean, you can't point toward a negative stock market and say that would be the reason, because we had a really fine year.
Surprisingly.
Even leading into this year.
And spending opportunities have gone down. People accumulated money.
Right. And you now, most folks can work from home. So I can't say that I've seen any big shift as to when or how or if I can retire. I've got kind of an interesting story. I do have one client that's in the home building business. He's actually in the high-end home remodeling business, kitchens, baths, things like that.
He's got to be going crazy.
He does a little bit of everything. And he was saying to me the other day, he said, Louis, usually I have about 11 jobs that I have to bid that are going on, that I'm out there, getting ready to bid. And he said, right now I have 110. And so I kind of questioned, I said, 110? How can you have 110? He said, well, hold on. And I really didn't expect him to do that. He walks out of the room, and he's gone for quite a while, and he finally comes back. It turns out it's 119. So he has 119 jobs to bid. He says, and he says, I just can't. I'm not used to not helping people along and providing customer service, but it makes me so nervous because I don't know how I can possibly get to all these jobs. And so he's actually one that, because business is so good, he's saying, I think I might be ready to retire. So, and he's serious about it
because
too.
he doesn't want to have to deal with all those jobs. And isn't it because everyone's out there spending that stimulus money?
Right. Yeah. I mean, obviously, stimulus money has to have a lot, but have you seen the price of a kitchen and a bath? It's a lot more than a stimulus check. So I don't know.
The price of lumber. But, I know we just had a floor put in, a couple of floors, and the gentleman who was going to do it, he all of a sudden got really backed up, and he's backed up until like August.
Right.
Because the work just kept coming.
Yep. Same thing. I've another one of my best friends owns a flooring company in St. Louis, and he just rolls his eyes when I ask him if he's busy,
So you wonder, though, there's a lot of money that's coming from somewhere, and you suspect that it can't be explained entirely by checks that they're receiving from Washington. So there are savings that have been accumulated, but I get the rate of appreciation associated with supply chain stuff. In other words, if it takes a long time to get some sort of electronic device, whether you're trying to get things from China or Japan or whatever other countries it might be, there will be a delay, prices go up. But the labor's already here. That's what's troubling about that, is that we see this inflation and the shortage of labor, but we have the same number of people that we had essentially 2 years ago. And so how is it that we have this additional business and there's this incredible shortage of people? because there were so many people that were unemployed even 2 years ago. It wasn't a big number, but if you look at it mathematically, it was big. So let's say we have inflation of 5%. There should have been employees available to soak that up.
I think you bring up a great point, and I'd like to comment on that as well. But I would like to go back to this the home and what's going on in the home. And the stimulus check? I think the stimulus check helped stimulate the process, but there's a whole redesign of how we work, and people are looking at their house and saying, you know what, if I'm going to be spending more time here, then I might as well get it to look
more of a pleasant atmosphere.
Right, exactly. And so they're staring at, some of the things that they've needed to get done all that time, and it's front and center. And so that's giving them the motivation to go out there. And I think it's that, plus just a little bit of a kicker with the stimulus money that had kind of moved the whole thing, forward.
Mm-hmm. So what about this labor shortage, though?
Well, I think what we've heard, at least in the media, is the extra unemployment benefits. But, the governor of Missouri just ended that, and I think it ends sometime in July, I believe.
Is it July, not September?
I believe it is July, yeah. And that extra amount they were getting because of COVID. So people were staying unemployed because they felt they were making more money, staying at home.
Another thing that is out there that I've heard, and maybe, we all have, is that some of the stay-at-home mom or stay-at-home dad, they're at home with the kids, and they're having a hard time finding, we'll just call them a babysitter, for lack of a better term.
Childcare.
Childcare, yeah. And because childcare right now is fully employed in different areas, or they're not wanting to come into the house because they're just concerned for COVID reasons. So, and that, if you multiply that by the amount of moms there are out there, or even dads that are they're with the kids, you can see where that could get to be an issue as well, preventing people from moving back out of the house back into the workforce.
So people then who are thinking about making improvements on their house, I'm sure many of your clients are, or they're moving, maybe they're selling the old and buying a new. Do you suggest that this money come from savings, or would you suggest that they pay that with current income?
It just depends. For us, it depends on the age of the person. I don't like my retirees to take on debt. I think there reaches a point in life where you just enjoy knowing that you don't have debt. Does it make financial perfect sense? Nah, maybe not. With interest rates where they are, that could change. But I think we get to a point in life where maybe we just want to pay it off. And so I think in my early days as a financial advisor, I would always kind of go through the pluses and minuses of the debt versus paying off the loan. And maybe if we take that money and then put it into the market or wherever we might go. I don't do that as much anymore. I just, I kind of view the temperament of the person, and then we decide. Because I think you can make a case either way about that. And, the other thing is, though, too, a lot of people wanted to get something done in their house, and if they're like me, I've got a patio I want to put. Well, shoot, I had a guy out in February, and he's got it all mapped out for me, but it's probably going to be, he said, October or November before.
Yeah.
But yeah, I don't know, Joe. It just depends on an individual case. Interest, debt is still cheap. You can do, home loan. You can get a loan against your home loan. We don't get some of that interest credit like we used to on our taxes, depending on how many deductions you have. That's probably not available to you like it once was. But interest rates certainly are still at a historical low level.
And you can lock in a rate. And many people assume that that's the case around the world, that this idea of having a 20 or 30-year fixed rate. I can tell you that exists nowhere in the world but here. If you think about it, the idea of making a loan for 30 years and committing, and the number being just maybe a point or a point and a half above what you'd pay for 5 years, obviously that's not a loan made based on market forces, or it's not a loan made upon an expectation that you're going to go more than 5 years, for example. And I think that there is a subsidy involved, depending on if it's FHA housing, Fannie Mae, Freddie Mac housing. So there is a subsidy there, and an insurer that allows these lenders to provide terms they wouldn't otherwise. But there's also the practical reality that I think there's an average turnover of like 3 to 5 years is what you read. So a loan is made on the assumption that it's going to be turned in, it's going to be paid off before it in fact gets very far down the road. Or of course it'll be subsidized. Either way, if you're one of these people that's going to stay in the house, I mean, I think you'd agree with this. If you could know, and we don't know, but if you could know that you're going to stay in a house for 10 years, even 10 years, not to mention if you're one of these people who, we all know them, they've been in their house for 30 years. And if you had asked them 30 years ago if they're going to be in the house 30 years, they said yes. I could, as I'm telling you this, I have in mind 3 couples that go to my church that fit this description, 2 of them in the same neighborhood. So for those people, I mean, it seems crazy to not borrow that money and keep it in place for 30 years.
You mean to borrow against the equity in your house?
Well, when I say that, I mean, if they have the option of paying cash for a house, assuming, let's go back 30 years, when who knows what rate they'd have been looking at then. But if it's a good rate, now if they were getting a loan, it was a 7% rate, it's not so good. But if you're at historic lows, so let me predicate this discussion on this. Assuming historic lows, so 30 years ago, they could have written a check for what then would have been probably $100,000 for a house. Let's assume they had that option. Some of your clients do, older clients. Or they decide to put down 10 or 20% and borrow the difference. Don't you think it's really tempting if a person is determined to stay long-term that they get that long-term financing?
I mean, I know what you're saying is if they would have had a loan at, say, well, actually, they probably would have had a loan around 7% back then, but they would have refinanced. They would have refinanced it down. If they could have known, as they can today, that they can get a 3.5% loan for 20, 30 years, how could you possibly build a scenario where it was stupid to get that loan and then use the money in other places, like investments, 401k, maximizing your 401k, et cetera? I can't think of a scenario where they wouldn't have been very smart to take the loan and not pay down the house had they had money to do either or. They would have been much better off to pay a minimal amount of some sort on the house and then see their portfolio grow. It's just that, part of what we do at Vine Wealth Management is we invest for peace of mind and for lifestyle. And it's not always just what's the bottom line dollar. Now, I'm not saying that if I have 2 stocks and I know one's going to outperform the other, I'm going to take the one that's going to perform better. I don't care if I like that stock, the other one better. I'm going to take the one that's going to make me money.
Makes sense.
But when it comes to debt, it's different. And I think it's got to be looked at individually.
But today, you don't find many people that anticipate staying in their home for 30 years. I mean, people move.
Well, that's a fact.
They stay 10 years and they think, okay, I want something bigger and better, or I want to downsize.
Well, how many homes? So, Joe, how many homes have you owned? I mean, how many homes have you? Let's say your primary home. All right, how many times have you moved from your primary home?
I've been 4.
Okay,
yeah.
So for me, it's 3, and I'm probably going to have a 4th one coming. So, yeah, how about
2 for me.
2, okay.
So you're pretty stable.
I am.
Well,
and I really don't plan on moving unless during retirement, maybe Florida.
Well, that is I'm sure a number of our viewers have a fantasy, if not, in fact, a home in Florida. Do you have many people who are torn between, do they keep holding securities and maybe rent a place in Florida? This is something I've thought about. Or instead go down, sell some investments and buy something in Florida. I've wondered what peace of mind there is in every year just going down. It's not cheap. You pay for, if you want to go down during the key part of the year, you might pay $10,000 a month, maybe 15 or even, it depends on what you get. Maybe it's a little home. Maybe it's 5,000, maybe it's less. But the point is you have no maintenance issues. You have no real estate tax issues. You have no upkeep to worry about somebody's going to break into your house.
Yeah.
All those things. You just simply, you enjoy Florida, but you enjoy it as somebody who goes down and rents. And you keep your investments as they are.
That was my dad. He always had a home that he went to in Florida, and he could afford to buy one, but he just never. He said, "Why would I want to do that? I just want to show up. I don't want to spend the first week and a half going back and forth to Lowe's and fixing things, and talking to different management groups that's managing the property." And he says, "I just want to come down. I want to be able to enjoy myself, play some golf, and do my thing." So that is definitely something to consider. Now, when you start looking at a second home, the way homes have appreciated, but there's no guarantee on that. Now, you can also then start to change your attitude toward buy versus rent. So buy versus pay off your loan versus have a loan. Because as a home appreciates, and if in, let's say, a Florida property, if that is indeed going to continue, I think we might be a little bit frothy right now everywhere, but there is an advantage to saying I have a $500,000 home. I put 20% down, which is $100,000, and the property grew 20%. So now my $100,000 just doubled.
100% return.
Yeah, 100% return, and that is, quite frankly, exactly what's been happening year over year for the last several years right now in Florida. And so from that regard, you would look at that and say, if I think that's going to happen, that might also influence whether you should pay cash for the house or you should put a down payment. Now, I'm back on owning a home, but that's how these folks who go out there and they buy rental properties and, the word flip, they flip the houses. And eventually when your portfolio gets to a certain level, the bank starts to give you loans on your other homes. And so your actual cash outlay is not much at all. But then you turn around and resell the house that you virtually put nothing down on, and you sell it for $10,000 more. And it's almost like $10,000 showed up on my doorstep.
Right. It's a profit.
Yeah. So there's ways to be able to look at second homes, maybe a little bit different than a primary home. But certainly, don't make no mistake, a financial situation would say that taking a loan on your house, there's not a thing wrong with that. In fact, financially, the numbers come out more in your favor to take out the loan than not to take out the loan. The last thing I used to tell my clients is when your dad told you don't take on too much debt, well, what they were really saying is don't take on more debt than you can afford.
Yeah.
In a lot of ways. It's not so much, don't go out and buy a Mercedes if you can't afford it. Maybe you don't want it anyway. So debt is all relative to what you can and can't afford. When it doesn't necessarily mean don't take on any debt. Some debt is smart debt, as Joe is what your point is.
See, I was always raised, never borrow against your house. Once it's paid off, don't touch it unless absolutely necessary.
That's a conservative philosophy. And not a bad one. Conservative. No. I think Dave Ramsey, which I think many of our viewers follow, hugely influential. This guy has, I think, the most followers of anybody on the web, a financial advisor on the web. I think he's number one financial advisor. I think Joe Rogan may have among the top followers. But
I think I'm right behind him. I think I'm third in that.
I must have read that. That's right. And, now, incidentally, you have to take out some of the, I mean, there may be exceptions, like I know Trump had a bunch of followers and celebrities would have a bunch of followers. So, but anyway, Dave Ramsey has a lot of people who listen to him. He has an outsized influence. And most people are reluctant to disagree with him because what he advocates is really very conservative. But at the same time, I think it's very sentiment-driven, or you might say it's driven by the particular personalities involved. Mm-hmm. He makes an assumption that debt is something that is like playing with fire, and throw in risks that you might encounter in life, whether it's illness, economic catastrophe that occurs in the economy or elsewhere. But I mean, his point is that it's the safest thing to do is to not have any debt. It's really hard to argue with the fact that that's fine. But on the other hand, the wealthiest people in the world never follow that advice.
Correct.
Now, if he were here, he'd probably say, yeah, but every one of those, there are 1,000 that, should have followed it. And they're broke, maybe. But I just think that his advice is good as a general rule of thumb, but people who have the discipline and who are willing to intelligently incur debt like you were describing, Louis, I just think to have a policy that you're going to have no debt really limits your opportunity.
I think there's no question. As we're sitting here in a building that you have, and I'm sure that you had to make a decision fundamentally. How do I build this studio out? How do I build this training center so lawyers can be effective for my clients? You have to make that same decision, and I'm sure that that an intelligent businessman doesn't just say, well, one thing's for certain, we can't have any debt on any of this. And I'm sure that's not something that you use as a philosophy. You look at all angles and say, what's the best way to approach that? So my take on this thing is that debt is not evil. It's bad debt. It's spending that's really, spending out of control that creates debt. Now, we need a home.
Yeah.
Okay, so the question whether we spend, whether we have debt for that home, or we pay for it out of our own, if we have the means to, is up to us. I don't think I would ever buy a home and pay cash for it, to be perfectly honest with you. But if a client's asking me, I have a home loan now and I have some extra cash, what should I do with it? I will kind of strip away emotionally how they feel about it, I guess, to some extent, like Dave Ramsey's. I would say that Dave Ramsey's target market is maybe a little bit different. Mm-hmm. I'm very familiar with his program.
Yeah.
Mm-hmm. It's not necessarily the businessman who's taking the date. It's more the young family that's getting started and trying to set good. But there might be some things there that I know he believes in cutting up the credit cards, and there's a lot of good to that as well.
Yeah, consumer debt. I mean, you can't argue with that.
Mm-hmm.
I mean, if it's a consumer item, wait for it. You can't defend a consumption purchase.
But I think that is good if it's you have a goal and it's for some sort of investment with hopefully a positive outcome.
Mm-hmm.
Yeah.
So if you look at the United States as a debtor nation, okay, and our budget deficit is not in a great spot right now.
Right.
However, that being said, what if we had no debt whatsoever? I'm not sure we would be as strong as a country, as an economy, if we always had a philosophy of having zero debt on the books. Now, if you let that, you can make a case that when we come back to don't take on debt that you can't afford, and some folks could make a case maybe up until the pandemic, and we needed to kind of help that here, that the economy of the United States can certainly support the debt. So a lot of times we look at the debt and we say, wow, this is just overrun with just bad decisions. And we fail to look at how much, look where our debt was in 1985. But we fail to look at where are we on as an economy and the growth of the economy since 1985 as well. So there's a proportion there that I think always has to be kind of looked at as well.
And where do you see the economy way past the pandemic, say 3 to 5 years? I know you don't have a crystal ball, but just what sense are you getting? I
mean, the economy is probably even more difficult. I think if you look 3 to 5 years from now, it might be challenging for the stock market. There might be some things there. As we do need to trim back some of our debt that we have incurred here, and quite frankly, some of the fiscal policy I think has really helped keep us afloat through this pandemic. But there's consequences to pay for that, and I don't know when those consequences are going to really start to show up and how quickly. I think it's going to be a little while yet, but I don't know if I'm willing to say that things are going to be that good 3 to 5 years from now. But if you look at all of the, quote, pandemics have different types of, forms. Maybe it's the Suez Canal crisis, the gasoline issues of the 1970s, Vietnam, et cetera, et cetera, et cetera. We do seem to weather those things much better than we might think. And tough times don't seem to last as long as reasonably good times last. And that's based on fact.
And I remember during the beginning of the pandemic when you were on the show, and you had said that your clients were very concerned, some panicked, when this all hit. How are they feeling now? Are they calming down, feeling a little bit more secure?
I think they are. Yeah, I think they are. But unfortunately, I think sometimes for clients, it's just as easy as my statement up this month. And it's up to me to kind of guide them what we should be maybe, reevaluating based on how good things have been. So we're doing a little bit more proactive discussion on balanced type of assets. Some of these, I still believe that probably what's called value assets, more conservative assets are probably in a better position than maybe some of the heavy growth assets. But so there's some things that need to be looked at, and a lot of times it's my responsibility to kind of play the emotional end and help them when they're overly enthusiastic or when they're overly pessimistic.
So your job's part psychology.
A little bit, yeah. Mm-hmm.
Yeah. Well, and money sometimes brings out the best and the worst in behavior. So let's talk about Bitcoin for a minute.
Fascinated by that topic, as you know.
Well, yeah, it's, we watched it go up when it went up as high as 60,000 about, a couple months ago?
Yeah.
Now it's down to, last I looked, around 30,000. Is that where we are now?
It's about 33, I think, today.
33? So what's your projection?
Bitcoin right now has no utility value yet, okay? So it's trading purely on emotion. You can't look at discounted cash flows or future cash flows and compare that to other companies who are growing at those rates and say where this valuation looks reasonable, non-reasonable. It's all of that's out the door because you're looking at an emotional asset right now, momentum based on emotion. So then you have to go back and you have to say, okay, but what about, the prospects for the business? Is it going to be a viable business? We don't know for sure yet, not by a long shot, whether or not digital currency is going to be a viable process for creating for storing value. Really what the whole thing is about is how do we store value? There's no one that says a dollar bill, if you lit it up tomorrow, $100 bill, there's nothing saying that is speaking money, money, money. It's just that we've decided that is the way we store value because we put our energy and our process and our safety behind that dollar bill. If you can create your own vault and have that vault to be impenetrable, as supposedly, for the most part, these digital currencies are, it's another way to store value that someone else can't get to. One of your good friends in Nigeria, in a Nigerian chat room can't, have access to it. So I'm not quick to say that digital currency is not potentially legitimate. In fact, it could be. It could very well be. If you look at the Bible says it is, right? The Bible says when at the end of times,
yes.
I'm going a little forward here,
there
will be one currency, not multiple currencies. So, you're fighting
That's
what's
interesting.
already.
That is very true.
Everyone would assume that would be gold or silver in some form.
Yeah.
But yeah, I'm really skeptical on the Bitcoin thing. My bet is that it fades away.
I wouldn't bet against that. I wouldn't bet for it at all. You're right, Joe. I think you're a businessman. I think you're a CPA or an accountant, and you've got this. And I think that logically, it is hard to imagine that we're going to go to this. But if you break down what money is, if I move this pen from here to here, and there's a value there, that value has to be stored. There's nothing saying that the government has to control that value, okay? Mm-hmm. That value is stored. I put that from here to here, and I didn't even have to get paid in the form of, I just have to store that value, and that's what. So once you break down the mindset of what money is and how it's protected, then you can start to see how a coding process could potentially become a wonderful way to store value. And that's what's going on.
So if you had a client that was interested in investing in Bitcoin, you wouldn't discourage that client in any way?
I wouldn't encourage that client.
You wouldn't encourage?
No, I wouldn't facilitate that process. I would say that if you had some money you want to play with and you can afford to lose, go in, and then I would tell them, here's the best way to, set up a Robinhood account and get yourself some Bitcoin if that's what you want to do. But that's not your serious investment money right now. And because there's no lined up business. I mean, Tesla, or a guy from Tesla, I'm drawing a blank.
Elon Musk.
Elon Musk.
He put his support behind Bitcoin. That was all for show. So who likes Tesla? Well, it's kind of the up and coming, kind of in the mainstream kind of client.
Right.
They also are going to love the fact, Tesla now can be purchased through Bitcoin. It just makes Tesla all the more sexy as a car. Now, they're not going to, who's selling their Bitcoin? Nobody's even selling it. I'm not going to go buy and sell my Bitcoin to buy a car. I'm probably hanging on to my Bitcoin. I'm trading my Bitcoin. I'm not using it as a currency, which is what it's intended to do. And so he didn't say, okay, put this Bitcoin, which there isn't something called Bitcoin that's physical, but put it on the table and, well, here's your car. No, you would have to still exchange it. You'd have to go to PayPal or some process and turn it into cash and buy the car,
Yeah.
So, that's the other side of this. So when you say that Elon Musk is now supporting Bitcoin, why is he doing it, and what does that really mean? It doesn't really mean a whole lot, quite frankly.
Yeah, and he's been kind of all over the map on that topic.
Yeah.
Little wishy-washy.
Yeah. He's gone back and forth. So you wonder, what are his real convictions? And it could be that he sees that people who are advocates of this alternative
Are the ones that buy his cars. Mm-hmm.
Yeah, that's that demo. Young, sophisticated, probably more education, probably both extremes, less education and more education. But so he appeals to a certain group of people that probably think Bitcoin is cool. So I will watch and see. I'm a little skeptical as I see the other currencies come along that are digital. And I think that...
And I think that's, not to interrupt you, but that's another interesting point, because you brought... If you look at the internet and the search engine on the internet, well, who's the survivor there? It's Google, right? But if you look back and you say, who were the early players? Because I think the only thing you can really look at is this wild and crazy thing called the internet, and whatever happened there. Well, okay, the first search engine came out in 1990, and it was called Archie. Okay, do you remember that one? I don't.
No.
No, but that was the first one. It was called Archie. 1991, there was a bunch of them, by the way. I'm just going to the most popular. There were every year thereafter, there was about 4 or 5 of them that came out. 1991, World Wide Web Virtual Library came out.
That's probably the academic one.
Yeah, it probably was. You're right. Virtual library. Yeah, it was. Okay, 92, the biggest, there was 4 different search engines that came out, but the one that was the largest was called Veronica.
I don't remember Veronica.
No, this is the first one I remember, 1993, Jughead. I remember Jughead being out there. I
remember one called Dogpile.
Okay, Jump Station, this was the same year. R-Base, Spider, I'm not sure what that was. 1994, InfoSeek. You guys remember that one probably.
Yes, I do.
Okay. And EINet Galaxy in 94. Aliweb in 94. Company called Yahoo, 1994.
Yahoo is 94?
1994. So, okay, and then we go, and same Web Crawler came out.
Web Crawler, I do remember that one.
Yeah. Lycos, I remember that.
I remember Lycos.
Yes,
Yeah.
I forgot all about that
So
one.
95, Look Smart came out. X-Site, Alta Vista, that was IBM's back version. Netscape began. AOL bought Web Crawler, and they were in the business.
AOL, I remember when that was up.
I know someone that still has an AOL
email
account. Yeah.
Ask Jeeves came out late 1996. And then MSN Search came out in 1998. and I've left a bunch of them out. And after MSN search in 1998, the drum roll please, this company called Google came out. Okay. Now, my point is, when it comes to digital currency, how many digital, even if this thing makes it, is which digital currency is going to be the survivor of those?
Right.
So that's the other difficult part of the whole process.
May not even be Bitcoin.
Right. Yeah. It may not at all be Bitcoin.
And of course, there are the headwinds, though, of regulation. China's already made clear they don't want anything to do with it, and people who use it in transactions involving their currency or within the geographical area of China, then they're going to take action. It's only a matter of time till it's regulated the same way in the U.S. and the UK, and as well as the UE. So I just think that it's only a matter of time till it essentially is reduced to having to accept a new digital currency, which is each country's. And I think that's what's coming. I think, for example, whether or not this is successful, I think you'll definitely have a digital dollar. You'll have you already have a digital yuan in China. So the EU, we know, is going to have some sort of digital. So, I think that's coming. So I think the idea of blockchain and digital, I think, is real, but I think it's going to be subject to control of a single party. But who knows? Like you say, who would have predicted the course you just described?
Mm-hmm.
Right, with the internet.
You forgot how
And it wasn't that
untangled.
long ago. It
No.
was not that long ago since the dawn of the internet.
And it's funny how all the others are forgotten
Mm-hmm.
Yeah.
Yeah.
very quickly.
Mm-hmm.
So gold, what do you think about gold?
Well, I think that that the key with gold is probably inflation and where we stand on inflation. The recent data on inflation, some of the core root just commodities have actually started to fall back again lately. I know that lumber, which was just crazy expensive, has probably dropped 25 to 30% in the last month and a half.
Wow.
Copper prices have come back down considerably. But that being said, is that just kind of a little bump in the road? Some people think it is, and gold is a good inflation hedge. Gold is not a good long-term investment. It kind of hovers around a fixed. If you think of the stock market, how it goes up and down like a yo-yo, but then you picture yourself kind of a steep stairs or a stairs. The stock market goes up and down like a yo-yo, but typically the fixed person who's holding the yo-yo is walking up stairs. So it's the plane where you make your money. It's not the short-term up and down. The plane on gold is very shallow. It's not very. It's risen slightly through the years, but not much. Not much higher than inflation, quite frankly. Versus stocks, which have risen at a much steeper plane than gold. So I'm not a big gold a fan of gold. But it would do well typically in a rising inflation environment. We haven't seen a lot out of gold yet, but I think that it's a reasonable okay to purchase at this time for a little bit of your portfolio as a hedge.
Mm-hmm. Yeah, that makes sense to me too. That I think it's going to have a run as inflation heats up a little bit. Boy, time has moved along quickly here. Before we wrap up, let's talk a little bit about travel. Travel has been in the news. It seems that people are determined this summer to make up for all the travel that perhaps they postponed over the last year and a half. It's maybe even the past 4 years, judging from the activity.
But we're going to blame it on the pandemic, right?
Yes. And a lot of people are choosing to get in cars and go somewhere in the U.S. I don't think still the doors are open entirely in Europe, are they, for American travelers? There's
restrictions in a lot of different areas.
Yeah, I think they're still out there in some countries. Italy, I know, was anxious, and I think they were welcoming visitors because their economies hit really hard.
Yeah.
But I still think that people traveling abroad face some restrictions, but it's a country-by-country thing. What are you seeing? Are a lot of your clients traveling this summer?
Well, I think you said it right. They're traveling, but they're picking different modes of transportation and different. The state parks are just, from what I understand, are just absolutely jammed. I mean, jammed to the point that if you're going to go to, the south rim of the Grand Canyon are going to go to the Grand Tetons, good luck. You probably should have booked it a long time ago. It's just full, jam full. The state parks, I think, are very crowded. I think, but that is obviously that, it's like Yogi Berra saying nobody ever eats there anymore. It's too crowded. So people are going to the state parks,
I love
of course.
that.
They're going there. And so that seems to be the direction that they're heading. Airline travel is up, but it's certainly I think that there's a disproportionate amount of car travel that's going on this year as far as the travel is concerned. I think kind of an interesting thing here is, and I know that when I mentioned this, most people kind of cringe, but they had the CEO, and I forget the gentleman's name, of Carnival Cruise Lines on not too long ago. And he made it, to me, a compelling case as to, he said, if you're going to travel at all, where you should travel is on a cruise ship, because it's the safest place you could possibly go. And so he went through the different safety precautions that they put inside of that controlled environment.
Yeah.
And he said, you won't find this anywhere else. First off, you have to be vaccinated to get on a cruise ship. So if you're not vaccinated, you're not cruising. And then the safety that they put into the kitchens, to the quarters, it said there's no hotel that you're going to see this to be the case. And furthermore, the people, if you do have it buttoned down in Cancun, they're going to go out to the streets and buy things and maybe pick it. But he just said, we have a controlled environment here that's unlike any other, and it's the safest place you could possibly want to travel. I kind of believe him.
Yeah, I do too.
Even if you're vaccinated, you could still contract the virus.
Oh, yeah, but so even if you do, though, it can't spread because everyone else is vaccinated. I mean, is it possible that somebody could get the virus being in that environment? And of course, the answer is yes.
Yeah.
But that's where it stops, meaning whatever incredibly small percentage that is, you can't have an epidemic with a ship full of people that's been vaccinated.
No, but you port somewhere and you get off at Puerto Vallarta, you could spread it to the people there.
Well,
don't you think?
You can't.
No, because you've been vaccinated.
You've been vaccinated. So,
but you can still get it. What if you got it and you were exposed, a couple of days before you got on the cruise ship? Come on, it's possible.
But if you've been vaccinated, it wouldn't matter.
Yeah, I mean, I think the whole point is, do I know how the whole vaccination rules, how it all works as far as how, but no, maybe not. But I would much rather be on a ship full of vaccinated people.
Okay.
Than I would be in the random public, I guess is what
where probably half of them are not vaccinated.
Yeah. Sure, I get that.
Yeah, and then to Joe's point, unless we've all been sold a bill of goods to get out there and get vaccinated, if we get COVID under a vaccinated scenario, it should be not much different than something else we could have gotten on any given day.
Right.
As far as a cold or what have you.
That's number one, yeah. And I wasn't thinking of that, but it'd be incredibly mild. But even if it were bad, it's not like the flu where it can still spread, because it can't spread because the person next to you has been vaccinated. So even if you're one of those improbable cases that portion out of a 99% vaccine that still gets it, that 1%, that's where it stops. So it is incredibly safe.
I would tend to agree, but there's still a lot we don't know.
Well, it's good we have different opinions on this.
But cruise ships also, though, entirely aside from the health thing, which makes sense to me, it's also very efficient. It's cheap travel. And a luxury cruise ship, you're spending less than you would spend for the same luxury on land at hotels and cars and the things that would go with a land trip of comparable luxury. And if you're not doing luxury, this was true a number of years ago. I don't know if it's still true, but as recently as 7 or 8 years ago, I remember someone demonstrated that you could actually live cheaper on a cruise ship full time than to maintain a house, food, all the costs that you'd have associated with living off a cruise ship. If you were to say, I'm just going to keep rebooking cruise ships.
I think I saw an episode on The Love Boat with a situation like that.
Someone was doing
back
that.
in the 70s.
Well, and incidentally, there are people who have lived on cruise ships.
Seriously?
Yeah. Well, there are two things. One is you can buy a condo in, there's several cruise lines, or I want to say cruise developers, maybe that's the right word. But one is called The World, and The World they were selling them like $2 or $3 million a unit, and they vary depending on how large the unit was. But these people, you can come on and just stay on it, and you pay dues just like in a condo tower, so you have monthly dues. But while you're on there, your food's, everything's included that would otherwise be included on a cruise. But forget buying something. I think that at this time, you could stay on a medium quality cruise line, a decent cruise line, buying specials, which they're always running specials, and spend less than $50 a day. Now, and the argument was you can't live on land for less than $50 a day.
Right.
And that's including your housing, your car insurance, and all that.
And here you've got a luxury ship you're on.
Yeah.
Beautiful. Yeah. It's a one-stop shop for a vacation. It really is.
And I don't think they're open yet, quite frankly. I think I don't think you can go on a cruise today, but it's getting close.
Oh, some are.
Are some open? Okay.
A few, not many. Holland America was certified for trips to Alaska.
Okay.
Carnival's really pushing aggressively. And the Holland America line is a Carnival line. And remember, when you say Carnival, you're talking about the parent company, you're talking about most of the lines we know of. I even think,
hotels, Carnival's in a lot of it. NCL is really a pure play cruise. If you're wanting to get into that space, NCL is more of a pure play cruise space, and Carnival is they're in a lot of travel stuff.
Royal Caribbean is not under that umbrella, but most of the cruise lines you may think of, like Celebrity, what are a few others? A bunch of them are owned by Carnival. Whereas Royal Caribbean is separate, and I've always liked Royal Caribbean. We've had good experiences. We've taken our employees on. Cordell and Cordell's been on a bunch of various cruises, probably 10 maybe, of various Royal Caribbean. So if you get the new ships, it's really luxurious, but that's what everybody wants is a ship that's been launched in the last 3 years.
And depending on your age, I remember I went on one of the first Disney cruises, and I swore I would never. Some
what
people
year
like
was
that.
this, if I may ask?
Oh, shoot. This was about 1990.
So you're taking your kids?
Your kids.
Yeah, I had my kids with me.
Okay.
But my thing to my wife was...
Did you see Mickey?
I said, we saw every
darn give me
dressed up.
I know,
well,
but
my take was I want to go on. If you go on a cruise, kids are there anyway. Okay,
sure.
If you go on a Disney cruise, it's kids on steroids, and it's like. I want to go on a cruise with my kids, but not with 14,000 other kids. So I'm like you. If I'm going to go on a cruise anymore, I want to upgrade just a little bit the cruise line, and I think the experience is completely different.
Yeah, it is. But now I'm going to be devil's advocate here.
Okay. All right.
For the parents there, it's true that you have a lot of kids on Disney, and you got to be sort of receptive to that whole Mickey and the characters thing, Pluto, these various characters that are around a lot. But Caroline and Elizabeth, we made the mistake of taking them when they were too young. So they didn't want to stay in Mickey's house or whatever it's called. They supply first-class all-day entertainment. You hand your kids off and they're gone, right, for the rest. Yeah, so parents sometimes
good
like
babysitter.
Mm-hmm. But our kids didn't care for that deal, so they wanted to stay with us.
Aww.
And what's really frustrating is we spent all that money and they're not cheap. Mm-hmm. Those Disney cruises,
those are high end. Yeah,
it's funny. It's a child-oriented thing with a lot of adults who go even without kids. I don't understand this, but we all may know some of these people. I had several employees who went without kids. Mm-hmm. Anyway,
lifelong Mickey fans.
So it's considered a first class cruise line. So this is not a budget cruise line.
It sure is. Well, it's Disney. Disney does things first class.
They do. Mm-hmm. But some people just really love those, and I'm frustrated by the fact that Caroline and Elizabeth have no recollection Nothing. So we thought we were making all those memories. We're the only ones that have memories.
Making memories.
Yeah.
Not that time.
They were too young. Let me mention a couple cruise lines. Seabourn. Have you ever been on Seabourn?
No, never have.
Seabourn is a smaller cruise line. They may have 200, 300 guests, but they're marvelous. They're expensive, but it's gourmet food. They get to know your names. You really meet a lot of people. It's very much about getting to know people on the ship. But that's a more expensive one. In terms of reasonable travel, I know a number of people whose opinion I respect more than mine regarding cruising, and they speak very well of Royal Caribbean. If you're young and want to party, if you're really into that whole thing, and you like the entertainment consisting of a belly flop contest.
A belly flop contest?
You jump off of you jump off of these diving boards into the pool.
Joe,
on your
you would
stomach.
have no chance of winning that.
No.
None whatsoever.
I'm telling you. But you would be amazed how I went on one Carnival cruise. I won't go on another one. But I know that there are people who like that, and it's cheap.
Windstar is another good one. Have you been on Windstar?
I've heard of Windstar, yeah.
Windstar goes through the Mediterranean, but they also go into the Caribbean, and it's smaller cruise ships, but they're very, and they typically can go into some ports if you're going to Europe that others can't go into.
More affordable, would you say?
They're not, I wouldn't call them more affordable, but they're not high-end to the point where they price themselves beyond. It's worth, personally, I think it's worth the difference. I've been on a few Windstar. Yeah, and they're a combination. They look like a big sailboat, but they're not. They do have some huge, gigantic sails. It's a cruise ship, and so they sometimes throw the sails out. And
now I can picture. I've seen those, and I've read about them. I've thought about doing something that involves sailing ships. Those would be pretty cool. But I think we can kind of wrap up on this note that we're all pretty confident there's going to be some travel for a while till people get caught up.
And just to that point, Joe, recently the CEO of Golden Nugget Casino, which is the oldest casino, it's been around for 84 years, I think he said. It's the oldest operating casino in Las Vegas.
It was there in the 60s, I guess.
Yeah, and it's on the original strip. Okay, they just had, in the month of May, in-person visits, the busiest month in the history of the casino.
Really?
The busiest in-person month in the history of the casino.
Do they attribute that to the pandemic, people wanting to travel again?
Well,
or
I think
it's
just getting back to what we're saying. People are ready to travel.
Yeah. So. Yeah. And I think a lot of the people who go to Vegas are not the sort that are woke and ultra concerned about the virus. They're not Fauci followers.
Right.
So I think that they're the sort of people that you give them the least bit of excuse to go out after a pandemic, and they're going to go. That picture of Las Vegas is consistent with the fact that a new casino opened, a mega casino. Justin, you're looking up the name of it just in the last couple of weeks. Resorts World.
Okay.
You would think they could come up with a better name, but it's the largest, most expensive development in decades in Las Vegas. Multiple hotels, thousands of hotel rooms, incredible entertainment. I mean, this is really the biggest addition to Las Vegas in decades. So they charged forward despite the fact that much of it was being completed during the pandemic. But I think their judgment was right, despite the calls of doom and eternal change to how people view the world. It turns out it takes a lot more than that to change the way people view the world. So people are getting back on cruise ships, which I always thought would be the case. You probably did
have
too.
said that all along since the beginning of the pandemic. Yes, you have.
So cruising's back, and as you said, Las Vegas will thrive. So I think there'll be a lot of travel then over this summer and in the fall. Too bad we can't figure out how to tax deduct those trips. Now, if you can figure out how to do that for your clients,
Yeah.
maybe if they took their financial advisor on their trips,
right.
Would that
or they would say, better yet, maybe if their financial advisor would take them on the trip, they wouldn't have to worry about any of it.
Now, before we wrap up, but have you thought about doing like seminars
on cruise ships?
or on a cruise ship or a remote place like in Vegas, but let's go with the cruise ship. Have you thought about participating in those?
We have. We've actually got some things working in that regard that have been kind of postponed, but it's not uncommon. It would be a very small group, not a large group, but a small group. But
and you would go in with several speakers.
Right, but there are investment companies, Forbes magazine.
Those are well known. Yeah,
they have their events.
Good working vacation.
Fisher
isn't it?
Investments, I believe, does something there too.
Now let's talk about this. So those opportunities to do travel and learn, and I love travel and learn. I mean, I wasn't so much thinking about financial, but where you travel and you learn history or historic place or art.
Right.
So people who go on those trips and their seminars relating to finances or investment, some portion of that is deductible, is it not? I should know this. I'm the CPA.
Know. I mean, I don't know. You always amaze me what you do know about the tax laws, but I don't know for sure because that doesn't. I know that if I go on a trip, well, let's do this. If I go on a trip and it's sponsored by someone that has an educational component to it, so I guess this is your answer, I can deduct to the extent that business took place on that trip. So let's say I had 25, I could confirm that 25% of my time I was involved in training or meetings of some sort, or, then I could take 25% of the trip off. And so that's what my accountant has always told me is the layout for some of the trips that I've been invited on in the past. Yeah,
and depending on the extent to which it's about business, you may be able to increase the 25%. But now there were geographical constraints.
Yes, those came out not too many years ago. I think they no longer allow Europe to be a part of that.
Yeah,
exotic travel. There's some limit to the type.
I think Caribbean. I think Caribbean probably qualifies. But that's just a suggestion to our viewers is to the extent you can do travel and learn, there's so many of those things available. So if you put together a trip like that, you would post that on your website?
I would. It's under events on our website. Yeah, we have other events that are not quite that right now, but we have other events that we have, and they're posted under events on the Vine Wealth Management website. Correct.
Now there's a great way to travel.
Yeah.
Well, we've covered a lot of territory.
Always fun having you on the show, Louis.
Thanks for inviting me. I always look forward to it.
A fount of information. So we'll look forward to having you on again. This has been another episode of Elder Talk. Till next time, take care.
You've been listening to Elder Talk with TuckerAllen, providing intelligent answers for those thinking about their future, with Attorney-CPA Joe Cordell. Sponsored by TuckerAllen, your estate and elder law advisors. For more information, visit TuckerAllen.com. Listen again next Saturday for another edition of Elder Talk with TuckerAllen. The choice of a lawyer is an important decision and should not be based solely on advertisements.